Good morning, everybody. Morning, and welcome to the Monday class. Excuse me, man, my voice just went. How's everybody doing today? Good to see you. I hope everybody had a great weekend. Woo, just bringing things up. A little bit of strong triggers and pullbacks, kind of what we're going to talk about today, right? Good to see you guys. Let me get things organized here. Guys, my name is Mark Novak. I'm going to be walking you through the wonderful world of Nexgen today. We're going to talk a lot about rules. We're going to talk about creating a plan. We're going to focus on the absolute best of the best today. At least for the first hour, we're going to talk about high probability trades. Giving yourself an advantage each and every time you take a trade, making sure that the rules that you're trading provide you an edge, and committing and learning to trust those rules. That's what our focus is going to be. It's Monday morning. I think we have a pretty small crowd so far. People are going to show up. They always do. But guys, I want to remind you, this is your class. If you have any questions, if there's anything that you need, if there's something that you need clarity on, let me know. If you did market replay over the weekend, you need to share a picture. Share that picture. Had a couple of you guys send me trading plans this weekend. Thank you for that. Had a good time reading them, looking at them. Check your email. You got feedback, just as promised. So if there's anything that you need regarding the feedback that you got, reach out. Present it in class. That's okay, guys. This is your class, 100%. Morning, Alex, Daniel, Carl. Good to see you guys. Before I do anything, each and every morning, hey, John C., good to see you. Yo, Ron. I go to forexfactory.com. I make sure that there's not crazy news, something going on, something high impact that has the potential to move the market erratically. Today is Monday, December 5th. And if I look at my news releases, and guys, I filter out my news releases. Any sort of news release, I want to know if it's coming, but I'm really only focusing on the American markets. So today in America, ISM services. This is a high impact news. That's what the red box tells me. The only thing that I'm concerned about is that I'm not trading in front of that high impact news. That I'm not jumping into a market that can be erratic, that can be unpredictable. So when I see that red box, that's my cue to just sit on my hands for a second, refill my coffee, toast a bagel, whatever it is. But don't put myself in a position that fights emotional responses from deep pocket investors. So we have ISM services at 10 a.m. So I'm going to put a note on a piece of paper in front of me. I'm going to set a timer on my phone at 9:55. Go take a walk, stretch your legs, do whatever you need to do. And then everything that I talk about, and guys, when I say everything I talk about, I mean it. Everything that I talk about comes from the education page. John Novak has done an amazing job of consolidating the information, putting it in one place, easy to access. So outside of classroom hours, if you have questions, you're going to find the answer here. Starting with the software user guide, NinjaTrader how-to. If you're new to Nexgen, if you're new to NinjaTrader, if you are new to just the indicators and all that good stuff, this is your how-to. This is your how to take a picture and share in class. Very important skill, something that I need you to do. If you haven't done it yet in this classroom, practice today. Post some pictures. I don't care what the picture of. It can be a vacation picture. But show me that you can take a picture of your screen and share it in class for feedback. How to mute the chat room, daily computer preparation for high performance, connecting, scaling, stops and targets, trade markers, cryptocurrency. If you're interested in that cryptocurrency, trading those crypto markets, there's a whole section dedicated to how you can set that up. Market replay. Hope a lot of you guys did that this weekend. I did market replay all by my lonesome one morning. I did market replay with my wife. It's fun going back, reinforcing rules and skills, adding symbols, building new charts, applying templates, all these things that you need to be able to do. Gary, you got some done? Nice. Then the one thing that I did this weekend as well is I deleted all my old charts and templates and workspaces, and I started over brand new. So all of my data is current, my charts are current, everything is 100%. It's kind of like a little facelift each and every week. I love to do this every week because it lets me know that everything that I'm starting, I'm starting ground zero, starting fresh. And you watched a video? Nice. I had a friend come in town last night. He's real curious about the software. So we sat up and I opened up charts, and it was kind of funny. It was very telling. He asked 1,000 questions that 10 minutes on that intro video would have answered. And me, like a silly person, tried to answer each and every one of them instead of saying, hey, sit down and watch this video real quick. So I love the videos, Gary, and I think that as you progress, the videos become more and more informative. The first time you watch them, you're like, man, I just don't get it. Second time you watch them, you're like, oh, that's what he meant. By the third and fourth time, you're putting things together, and I think you get something out of the videos every time that you watch them. But that is it for the software user guide. That's one-click shopping for NinjaTrader. And then we've got the tutorial section. This is where, when we talk about rules, when we talk about the looks associated, everything that we're doing comes from. They really do, don't they? It's definitely a Novak 1-2 punch, Gary. I build that foundation with you guys. I create that awareness of the indicators and what they're telling you. And John Novak comes in every now and then, teaches a class, and takes that foundation and expands on it. If you're in the owner's room, the trader chat for the owners, John Novak spends a lot of time there talking about nuance, talking about really getting the most out of the software. But first you have to build that foundation, right? You got to focus on the best of the best. And here's John Novak right now. A good morning trend trade. Guys, for the first 30 days, you're going to keep yourself focused on that trade that repeats itself on every market every day so that you can be a trading success. You being a trading success creates confidence. Every time you win a trade, you're more and more confident. You're more and more focused on following rules. And that's kind of the goal in the beginning, is to put you in a position where you're focused on only entries, and then you start to focus on management, and you build that great foundation that takes you to the next level. So that first 30 days, we're going to talk about the high probability trend trade. And the high probability trend trade is really just the result of chart reading. Let's see if I can copy this and paste it in the room. Because what you're going to find, and most people are like, oh man, 90% of what you do is going to be chart reading. I mean, 90% of what you do is going to be reading your indicators, taking the information that they give you, and then determining if you have enough advantages in place to enter a trade. And we're going to focus on that for the first 30 days. You're going to be able to open up your charts, look at your indicators, and you will read them and understand where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. And you're going to use this information, and it's going to create these advantages. You'll be able to use those areas where the market is likely to go for entries to high probability trend trades. You are going to be able to recognize where the market is likely to go, and you're going to build a management plan around that concept, using momentum and clear paths to get you to that next key Fibonacci area. And then you're going to understand where the market is likely to stop. And these are the areas on your charts where the trend may reverse, where it may create a large bounce. So we're going to focus heavily on chart reading, especially for that first 30 days. And we're going to use the chart reading. You're going to use the chart reading. I already do. To focus on a high probability trade. And this is defined is when each indicator on every chart agrees with the rules for the trade. And this is when the triggers are their strongest. This is when there's nothing in the way, none of those areas where the market is likely to stop, and you have a very clear path between your entry and your target. If you focus on this high probability trade for the first 30 days, it's going to teach you to read those indicators. And then your ability to read those indicators is going to take you to what's going to end up being the vast majority of your trades, a medium probability trade. And this is when most of your indicators line up for a trade. However, a small issue exists. Your chart reading is going to allow you to identify that issue. And this will be the majority of your trades. And when you're executing medium probability trades, you're going to manage them assertively. Your chart reading is going to allow you to manage these trades assertively. If there's trouble in your way, you may take a portion of the position off at that trouble spot. Again, your chart reading is going to teach you to recognize these trouble spots, and you can reduce your risk to a zero loss. So high probability trade, 30 days, learn to read your indicators. And guys, understand that you will take trades where a small issue exists. But you're going to do that after you learn to read your indicators. So the high probability trend trade, 3 rules, pretty simple. Takes a little bit to get used to them, but it's going to be 3 rules on 2 charts. You're always going to start on your largest, slowest chart, and this is your 13-2 chart. And your 13-2 is like a broad stroke of a brush. You're literally gauging the overall temperature of the market. You're going to be able to determine the overall trend. Is the market going up or down? And then commit to only trading in the direction of that trend. You're going to be able to gauge the momentum of the market. This is rule number 1 for a high probability trend trade. And then you'll also be able to recognize those areas where the market is likely to stop, or you'll be able to recognize that there are none of those areas where the market is likely to stop. And this is actually rule number 2 for a high probability trend trade. So your first 2 out of 3 rules are going to happen on the most current bar on your largest, slowest chart. Let the 13-2 lead the way. Let the 13-2 tell you that it's okay to look for an entry based on your rules being met. And when they are, that's when you come to the 5-1. That's when you get to that smaller, faster chart. And this is where you're going to refine that broad stroke of the brush provided on the 13-2. This 1 bar on the 13-2 may produce 20 or 30 bars on the 5-1. We're going to take that broad spectrum and just pinpoint accuracy, that best of the best area where the market is likely to continue, and you're going to use that for an entry. And by doing so, you're going to be able to reduce risk, and you're going to be able to maximize your profit potential. So we're going to use 2 charts, and we're going to look for 3 rules, guys. When you look at the user guide, rule number 1 says, after a breakout of Fibonacci, after a new top or bottom, small triggers must be strong and located outside of the large trigger lines to look for trend trade rules number 2 and 3. And guys, I just put a picture in the room. Let me do this. Rule number 1 says, you must have strong triggers. Rule number 2 says, do not trade into any Fibonacci areas that are expected to hold. Those are those termination conditions, those likely to stop areas. Let the Fibonacci area break before continuing to take trend trades in the established direction with strong triggers. So again, if we simplify, rule number 1 tells us we must have strong triggers. Rule number 2 says, don't have any termination conditions, no areas where the market is likely to stop. And then rule number 3 is going to define your entry. And when you define your entry, use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Had an amazing conversation with someone who will remain nameless yesterday about understanding the language of the rules. Understanding, 1, how to consolidate it, how to say it simply. The strong triggers, that's it. What do they look like? And then committing, making sure that you understand the concept for all 3 rules. Because each rule provides an advantage. The first rule is going to provide you the advantage of momentum. The second rule is going to provide you the advantage of a clear path. And the third rule is going to provide you the advantage of being able to enter the market where it's likely to continue. So we're going to string these together, starting on the 13-2 chart, and you're going to commit to strong triggers. That's what your rules say. That's what your plan says. In an uptrend, when your background is green, strong triggers means that your small triggers are above the large triggers, that your large triggers are widening, they're angled in the direction of the trend, and it's that space created as the small triggers accelerate away from the large triggers that lets you know that the odds are favorable for the market to continue up. You're going to hear me say in this class a lot, did you have odds favorable momentum? In a downtrend, smalls break through, accelerate away from the large are widening, they're angled in the direction of the trend. That space created between the two lets me know that the odds favorable for the market to continue down. Rule number one is odds favorable momentum. Strong trigger lines mean that you have odds favorable momentum. And you're going to commit to this, at least for the first 30 days as you learn to read your indicators, because when those small trigger lines work their way back inside of the large trigger lines, you're giving away your advantage of momentum. This is a weakening of the large triggers, and anything can happen up or down. So this is your look for that first look at high probability trend trades. In an uptrend, from that point where the trigger lines accelerate away from the large trigger lines until they return and re-enter. This is where you're going to look for high probability trend trades. On a 13-2 chart, these bars will have wicks, these tails. These are potential entries, and you notice that they're circled while there is odds favorable momentum. Same thing in a downtrend. You don't have the advantage from start to finish. There's a window where they accelerate away, and that window closes when they return. You're going to look for your entry opportunities inside of that window. So rule number one gives you the advantage of odds favorable momentum. Rule number two says no termination conditions. Don't trade into an area where the market is likely to stop. It makes sense, right? We want a clear path. Well, termination conditions are a Fibonacci-based indicator that may reverse the market, and we're going to use a comparison between the areas and their trigger lines. The same trigger lines that give us odds favorable momentum is the same tool that you're going to use to gauge whether or not an area is likely to stop the market. When I say areas, I mean blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots, cyan divergence low lines, magenta divergence high line, a large chart midband if your large triggers are a full bar away. All of these are areas. And then we have three divergence in the same area that doesn't use a line on the chart, but rather losses of momentum in the same range. And we'll cover that one last. This is going to help you recognize change faster. But first we have to define the areas. And guys, this is a very important lesson. When I started trading, I was so good at trading in termination conditions. It felt like an awful lot of my trades were going right into areas where the market is likely to stop, and because I was losing an awful lot of trades. So how do we determine a termination condition? Well, price, meaning these price bars, come down and make contact with an area, in this case an area of support, that blue Fibonacci support. When price reaches an area, I want you to ask yourself, where are your trigger lines? So price reaches that area. Where are your triggers? Well, if you reach support and all of your triggers remain above that area of support, support is likely to stop the market. It's a termination condition. Rule number two hasn't been met. If price reaches resistance, where are your triggers? They've all remained below resistance. Resistance is a termination condition. Rule number two is not met. No more trade. Even with odds favorable momentum, small triggers below the large triggers, Everything is railing down with that odds favorable momentum. Price reaches one-to-ones. Trigger lines remain above the area. This is an area likely to stop the market. No short trades. It's a simple little indication that the market may reverse. We lose the advantage of a clear path, so we don't take a trade. You guys with me on this one so far? Price reaches the area. Where are your trigger lines? Such an important concept. Here, price creates a pivot, and there's a divergence line, which means that there was a loss of momentum coming into the pivot. This itself, with the trigger lines through the area, is not a termination condition. It's just a pivot. But when price comes back and reaches that cyan divergence low, you ask yourself, where are the trigger lines? They all remain above that area. This is a termination condition. The cyan line acts as a termination condition, an area likely to stop the market. No more short trades. When price exceeds that line a few ticks and then heads the other direction, this is what we call a pivot stop out. Bobby T, great question. I wouldn't say how many bars. If I'm talking about a termination condition, if I get a tick below this resistance and my trigger lines are nowhere near, I may consider that. See how we came down to support, missed it by a tick? Remember that these are areas. These are based on thousands of calculations. And that's why we call them areas and not precise spots. So if I come all the way within a tick, then I'm for all intents and purposes, I'm saying this is a termination condition. My trigger lines don't follow. They all remain above. Very often, and you'll see it, price is going to hit these Fibonacci lines. And if they're going to hold, it may go a tick or two above, as it did here. It may be a tick below. So I typically give myself a tick or two on either side of the line. Does that help? Because one of these bars on the 13.2, that's like 26 ticks, I believe. It's a lot. This bar goes from 95 almost to 65. So that's a lot of space. So if you think about the order of operations, price reaches the area where the trigger lines, what it'll do, it'll help you begin to recognize. Price reaches the area. Here it doesn't quite reach the area. It's a tick or two off. None of the triggers break through. The market still reverses. Here it goes way past the area, right? You're kind of in no man's land. There's no termination conditions, but you get this pivot. Well, this pivot, I'm going to show you on a smaller, faster chart how you can recognize this change happening because you don't see it as fast on a large chart. And that's where we look at the three divergences in the same location. And this is the termination condition. I want you to write this down on a piece of paper. This is the only termination condition that you're looking for on the 5-1. Three divergences in the same location, meaning three losses of momentum. That's what divergence is. It means that when price went down, got to this spot and headed back up, we call that a pivot. When this pivot, the momentum isn't following the market, this negative number prints, this cyan line prints to the right. When it happens 3 times and it's in the same general price range, this is a huge red flag for us, letting us know that the trend may end, that it may reverse on us. You're going to see this in situations like this, where we're not at an area. We've exceeded the area. We haven't made it to the next area, but you still get that pivot. You'll notice the slowdown on the triggers, and then your smaller, faster chart's going to show you it in the form of divergence. And when that third divergence, the small triggers work their way inside of the large, it becomes even more powerful. Because based on what we know, it happens on every chart, Bobby, but you're going to see it on the 5-1 first because it's that smaller, faster chart. And look at this at the third divergence, your small triggers are now inside. They have become anything can happen triggers. The first divergence, I still have odds favorable momentum. Not worried. Second divergence, they're getting closer. Third divergence, they've worked their way inside. This becomes a little more powerful on that termination condition. And then when that third pivot is higher than the previous from a low or lower than the previous from a high, you get that head and shoulders patterns. But this is the one I'm showing here, Bobby. This is a smaller, faster chart. This is recognizing the change that may be happening on the 13.2 a little more in the moment. But if you see those three divergences in the same location, it usually causes a major reversal on your higher time frames. And you can typically expect larger moves after that three divergence, because all it is a battle. It meant that your buyers were trying to push the market up and they were losing momentum, and your sellers pushed it back down. And the buyers tried again, and once again they lost momentum. We see one of those pivot stop outs, and the sellers tried to take control. But the buyers had one more in them, and that third loss of momentum, that lower pivot, that's where your sellers just unload. So we can see this change on any time frame, but we'll recognize it first on the smaller. Absolutely, Shane. If you see three divergences on a 13.2 chart, that's a great termination condition. That's a strong top that creates that reversal, gives you odds favorable momentum. And I'm glad you said that. What's a strong top? Well, a strong top means that you had a termination condition at a high that creates a full reversal that gives you odds favorable momentum. This is your best chance of success with that high probability trend trade. This condition, whether it's a pivot stop out of the high, whether it's just resistance acting as a termination condition, when it creates a full reversal, gives you odds favorable momentum, that's your best of the best look for a high probability trend trade. When a termination condition from a low creates a full reversal, meaning that those large triggers go from red to green in this case, then gives you odds favorable momentum. There's one of those tails again. There's that circle. This is your best of the best. And if you go back to your first 30 days and beyond, focusing on the 5-1 trend trades that happen after a termination condition on the 13.2, that high probability trend trade gives you the best chance for early success. Absolutely, strong tops and bottoms can definitely create larger moves. The one thing that I want to remind you guys about termination conditions, though, and my wife was, we were talking about this morning. This is a termination condition, right? When price reaches support here and the trigger lines haven't broken through, this is a termination condition. When both of my trigger lines break through, I now have clear sailing right to the next termination condition. They break through, I have clear sailing to the next termination condition. So every time price reaches an area, guys, ask yourself where the triggers are. This is your first foundational approach to trading. When price reaches an area, where are the triggers? And respect those termination conditions. And then, remember we go to medium probability trades, right? Then you're going to say, well, I had the Mac Daddy of all termination conditions, and I have the strongest trigger look that I could ever have. And then you can start looking for opportunities that fall into that medium probability trade. But remember, you're learning to read your indicators right now. You're just giving yourself the advantage of being able to recognize what the charts are telling you. So for example, the first loss of momentum, you may find yourself in a trade here at 52.94. When that third divergence prints, you're going to be able to recognize that change faster. You're going to be able to manage out of a trade before a loser. It all goes back to your ability to read your charts. The more time you focus on that in the beginning, the easier it is for you after that first 30 days. So are you guys with me on termination conditions? Are you with me on momentum? Strong triggers give you the advantage of odds favorable momentum. Rule number one, let the 13.2 lead the way. Make sure that you're not trading into an area likely to stop the market, right? We have the advantage of a clear path. So now we just need to find an entry. Guys, this is my favorite part. During the live market, this is going to be the look on your 5-1. When the 13-2 triggers are strong as they can be, when there's absolutely nothing in the way, your 5-1, your smaller, faster chart, is going to be railing to the upside. All of these bars are green. Your large triggers are wide. They're angled in the direction of the trend. This is that point in time where you're going to say to yourself, I have the advantage of momentum. I have the advantage of a clear path. I'm going to look for the advantage of the area where the market is likely to continue. Rule number 3 says, I'm going to use a limit order. Is everybody familiar with limit order? To buy a pullback, meaning a small retracement in price. When everything is going up, on this smaller, faster chart, I'm going to rely on a little pullback. And I want that pullback to be to an area. Fibs, mid-bands, or 1-to-1s. And that area is going to be inside of favorable large triggers. In the conversation we had yesterday, I think that remembering the language that goes into creating an entry. Use a limit order to buy or sell a pullback at an area inside of favorable large triggers. It kind of defines, your rules define exactly what you're looking for, and now it's up to us, it's up to you to learn that look. So we have everything going on. I'm looking at my large trigger lines. I need a reversal bar. I need a down bar after all of these up bars, and this signals the beginning of the pullback. This is the patience part of what we do. The 13-2 says the market is likely to continue up. The 13-2 says that there's absolutely nothing in the way. It is a freight train of momentum and clear path, and we want the market to come down on a smaller, faster chart so that we can get in and take advantage of those advantages. So at the time of this reversal bar, this down bar after all these up bars, or if we're in a downtrend, that first up bar after all of the down bars, we're going to create what's called the window of opportunity. And your window of opportunity is the area where the market is likely to continue. That window will extend from your highest point of support inside of those favorable large triggers that are wide, they're angled one on top of the other. This is your best of the best look. Right there. You're large, you're synthetic, one on top of the other, angled wide in the direction of the trend. We're looking for that window of opportunity from this mid-band all the way down to these 1-to-1s. And because of the advantages we have, I'm going to right-click right there at 79.20, 79.21, and I'm going to activate my limit order, and I'm going to wait for the market to come to me. If it does, remember, I don't control whether or not it does. All I control is whether or not my rules are met. If it does, I am now long at 79.21. I'm in a long trade, meaning I bought the market. I have the advantage of odds favorable momentum on my 13-2. I have the advantage of no termination conditions on my 13-2. And now I have the advantage of having entered the market at the area where it's likely to continue. Those tails that we circled on the 13-2 chart when we were looking at odds favorable momentum, there's that tail on the smaller, faster chart. It's that pullback to the best of the best area. And guys, my initial stop goes below that window of opportunity, below that area where the market shouldn't go. Because if the market continues through these areas, I no longer want to be in that trade. But I'll take this trade 1,000 out of 1,000 times because 70 to 80% of the time, this is my result. Profit target reached. And then when that market begins to move in the direction of my trade, I'm going to reduce that risk from below the window of opportunity to below the reversal bar. Because I waited for the pullback to the area, my profit potential is increased, my risk is reduced, And guys, one of the most common things that I see with new users is they begin to focus on ticks. And right here, waiting for that pullback to the best of the best area, there's going to be little fluctuations in the market on a smaller, faster chart. And I'll see new users jump in, and I'll see entries at the top of one of these little bars, only to have it go back down to the best of the best area. If your stop is initially below this window of opportunity, jumping in too soon increases risk, and it reduces the amount of money that you can make, not to mention the headache of having that thing come back against you, the stress, the anxiety. So waiting for the best of the best area. You guys with me so far? We're just going to put it all together over the next 30 days. And I'm going to teach you guys to study. If you pull up both of your charts, your 13.2, you know what? If you just start on your 13.2 and you find one of these bars with the tail, and there's odds favorable momentum, smalls above the large are wide, they're angled in the direction of the trend, rule number one has been met. If price hasn't reached that key area, rule number two has been met, no termination conditions. And Bobby T, I want you to see this because sometimes this is one of those questions that people don't know how to ask. I didn't. I used to think, well, man, I've only got 5 ticks to resistance, right? Well, remember, we're buying a pullback. That market's coming against the overall trend all the way down to 80.80. So that 5 ticks turns into a 25 tick opportunity. And I used to watch a lot of people in the beginning say, well, I didn't have room to the target because of where the top of the bar was. Well, remember that you're calculating from the entry. And if this circle lines up on your 5-1 chart with an area of support inside of favorable large triggers, you have a high probability trend trade. This is the look that you're studying. This is the look that gives you all the advantages. This is the look that you need to be so comfortable with that you take it every time it presents itself. Because this is the trade that typically wins 70 to 80% of the time. And what's the other half of a trade? Also, that's what I figured. I had that little aha moment, Bobby, after we talked about the areas. Calculating from your entry point, not from the top of the bar. And guys, let me cover one other thing too. These small triggers on the 5-1 are almost always going to turn against you at least a little bit. Remember, the 13.2 leads the way. The 13.2 has odds favorable momentum. In order for us to get that pullback to the best of the best area, very often these small trigger lines are going to turn against you a little bit. So if you're looking for the perfect entry, let those small trigger lines start well outside of the large, odds favorable momentum. You've got the same look on both charts. So guys, this is the high probability trend trade. Let's do a quick little, this is crude oil. I'm going to circle a couple of those tails with odds favorable momentum. That one's right at the tail end, right before that area is reached. And I'm going to scroll back, and I want you guys to see something amazing. All 3 of those circles, smalls outside of the large, pulls back to resistance inside of favorable large triggers. Not the best trigger look, but that window of opportunity is tiny. Here's a second divergence. Notice how the trigger lines are pulling back. If you got in at this one, you get a third divergence, which is an opportunity to manage out. Termination condition on the small chart, the only one we recognize, might have gotten you out of this trade. But when your trigger lines get to the other side of the termination condition, just like when they break through an area, you get one more pullback with no divergence to an area of resistance inside of favorable large triggers. and it finishes that move to 81.94. And look at how Fibonacci held. Termination condition creates a full reversal. Full reversal gives odds favorable momentum. Let's see what happened down here. The market pulls back with no divergence to an area of support inside of favorable large triggers and finishes the move right to resistance. Guys, this is your trade. This is the last, what time is it? In the last 40 minutes, there's been 3 opportunities to enter the market. All of them 100% rules-based. This is how you're going to study. Termination condition creates a full reversal. Odds favorable momentum. Let's see what that one looked like at 6:09 a.m. What does this circle drill do for you? Well, it teaches you that you're going to have to wait a little bit now and then. You don't have the best of the best all the time. If you entered at the mid-band, the market comes all the way up. It's about a 17-tick move, $170 worth of movement. You get a second divergence, your trigger lines are returning. If you stay in the market, a third lower divergence probably takes you out. And then the market comes up, smalls above the large, larger wide, they've cleared the area. Little pullback directly to an area of support at your large triggers. Are you guys with me? High probability trend trades. Now we have a termination condition that creates a full reversal. Guys, this is a trade that happens on every chart, every day. I have no divergence. My large triggers are coming down strong. I don't have areas inside of them, but they look like they may line up somewhere around right here. Always looking, always reading, looking for the advantages. Here I have the advantage of a termination condition that creates a full reversal. I have the advantage of odds favorable momentum. My smalls have broken through the area and my large have not. Guys, this is what they call a 50-50 trade. Has nothing to do with your chances of winning. It means that your small triggers have broken, your large triggers have not. The area has the potential to break with odds favorable momentum, but it is not broken yet. When I have an area that is not completely broken, I want my entry, I want my pullback on the 5-1 to have no divergence. I want my pullback on the 5-1 to have a small window of opportunity. Because a loss of momentum on my smaller chart, when I have an area that isn't completely broken on a larger chart, can create challenges. When we talk about a perfect entry on the 5-1, I took some pictures this morning. Smalls below the large are wide, they're angled in the direction of the trend. Here I have a cyan divergence low. My smalls are broken, my large are not. Are you guys with me on this one? 50-50 termination. Has the potential to break, but it has not quite broken. My plan says that I must have no divergence and strong triggers on the 5-1. And look how with no divergence, it pulls right back to that small window of opportunity. And I can tell you that this one continued the move down to Fibonacci support. Not long after, I had a 50-50 trade on crude oil. Great termination condition, full reversal, odds favorable momentum, area for entry inside of favorable large triggers. My plan says I can't have divergence, so I didn't take an entry here and it kept me out of a loser. If you're brand new, guys, this 50-50 trade is your first medium probability trade. 50-50 trade, smalls are through the area, the large are not. Divergence prints, it's not my trade. There's what happens after. Remember that your rules give you an advantage. Your rules help keep you safe. And then I took one more picture for you guys this morning. I'm going to share my pictures. Here I have odds favorable momentum. My trigger lines have completely broken the area. I have no termination conditions. Because it's not a 50-50, guys, this is my rules-based entry right here. This is my window of opportunity. This is where 1,000 out of 1,000 times I'm going to pull the trigger. Look what happened. Got stopped out. Anything that wins 70% of the time will lose 30%. I want you to write that down, spray paint it on the wall. I need you to say that phrase until you believe it wholeheartedly. The rules that you have give an advantage. That's all they do. Rules give an advantage. They give a statistical advantage, a methodology that's been proven to win more than it loses. That's what the high probability trend trade is. Your job is to build the trust in your plan so when this exact same setup happens, you take that trade because you know that it wins more than it loses. And 30% of the time, there's a cost of business associated with being a day trader. Does that make sense? And Michael, you said you took that trade you were going to post? Michael, can I ask you, when you took the trade, did you wonder what went wrong? Were you like, man, what did I miss? Exactly. So guys, this is the advantage of this class, especially you new users. I want you to recognize this. If you take a trade that fits the rules 100% of the time, that has the statistical advantage, hey John, I see you, that has all of the rules met and your rules have been proven to provide an advantage, and Michael, if you take that picture and you post it in class and you're thinking to yourself, man, I screwed this up somewhere. Somewhere I did something wrong. I'm not sure what it is. And then we get to have this conversation. And I use a checklist, and I'm going to give you guys this checklist. Is the market coming from a good top or bottom? It is. Do you have odds favorable momentum? I do. No termination conditions? Absolutely nothing in the way, guys. This is the open highway, clear path. And I had an area for entry. And it just didn't work. Michael, it just didn't work. So Michael, are you developing enough trust in your system, in your rules, and your methodology? If it looks exactly like this again in 20 minutes, will you take it? Because you know you have a statistical advantage. Guys, that's the goal. The goal is for you to have that trust. That trust comes from your study, comes from your plan. I'm going to give you this right now. This is an example of how to write your plan. Guys, this is a plan that I stayed focused on last week 100%. I didn't deviate from this plan. And it's an example plan. It's a brand new user plan. I did 87% winners last week, which I realize I messed up. I went outside of the 70 to 80% range. But this is the most simple approach to building trust, to understanding what's going on. And use the phrase, my trade is, to define your entry point. Not to take winning trades, not to manage trades. Just going to define your entry point. Where are you going to enter the market? Well, in order to enter, the conditions of this checklist must be met. Guys, I'm going to give you that checklist right now here in the room. Download this. Make it yours. There's a version of it right there, the one that you're looking at. And you know what? We're going to go bonus plan today. Here's a version of the checklist that literally has pictures of what these rules mean. So in order to enter the trade, the checklist must be met. I must have odds favorable on the 13-2. There can't be termination conditions. My entry needs to be correct. It's my job to practice this, to hold myself accountable to following these rules. You'll notice the first one is the market coming from a good top or bottom, a strong top or bottom. It's not mandatory, but it will increase your likelihood of success. This is my perfect long. I should be able to check less, yes, on every trade. And then I'm going to put some pictures of my perfect long into my spreadsheet. What's it look like? or my perfect short. It's a rules met 100% trade. I not only want to write down what it's going to take to get me in, I want to visually be able to see it. And if there's any entry conditions that must be met on your plan. So for example, that 50-50 trade. If your plan is going to say no divergence on the 5-1, write it into your plan, commit to it. What's it look like? Well, it looks like this. 50-50, no divergence, strong triggers, perfect entry. I have it written down. I have it visual. Maybe you put strong or small triggers must be outside. Guys, this is your first step towards being successful, is committing to one thing that it's going to take to get you into the market. Keeping it simple, keeping it consolidated, making sure that your rules provide the advantage. That's your entry. Your next step, and this is what Nexgen Jen is learning right now, is eventually you're going to have to manage that entry. Define your management plan. Remember, guys, this is your trading plan. This is your business plan to be a professional day trader. You are identifying and committing to a set of rules that give you a statistical advantage so that you can be consistent in the market. New users, if you keep your management plan mechanical in the beginning, very focused, it's going to make it easy. Take the emotion out. I will trade 2 contracts. Notice the language. I will. My initial stop will be 12 ticks. And then I'll adjust it above or below that window of opportunity. You have to understand the window of opportunity to be able to adjust. It is, Bobby. Taking emotion is difficult. Believing in your rules is one of the biggest steps that you'll take. Removing emotion. This mechanical management plan, I find helps me a lot. My initial stop will be 12 ticks. That's what I'm going to put into NinjaTrader. But I'm going to adjust it above or below that window of opportunity, right? I'm going to go to the manual. I'm going to look at that. And I'm going to do exactly what the rules say. I don't have a choice. It doesn't matter what I think, what I feel. I'm going to put it below that window because that's what my plan says. It'll be moved 2 ticks above or below the reversal bar in the direction of my trade. 100 mechanical, no emotion. This is what I have to do. Take profits on the first contract at $100. Why? Well, $100 isn't a lot of money, Mark. No. But in the beginning, for the first 30 days, if you take 10 trades and 8 of those you take $100 on, there's a dopamine kick, guys. That memory of success creates confidence that's going to have you motivated to do what you're doing. Once I go to $100, I'm going to move my stop to break even, and my second target will be $200. On any trade, I'm only looking for $200 worth of movement, $300 worth of profit. And guys, you're going to take a lot of trades in the beginning that are $100 trades with a break-even exit. I want you to come to terms with that. All you're doing right now is beginning to learn how to move your stops, beginning to learn how to have your targets in place, taking the information that the market gives you in the moment and being aware so that you can learn to manage. But the cool thing is, are you ready? You're taking pictures of everything you do. Every time you take a trade, you take a picture. Every time you take a picture, you put it into the spreadsheet. Guys, the spreadsheet is your trade journal. Every trade that you take goes in here. Everything that you do on Monday, you're going to study Tuesday. Everything you do on Tuesday, you're going to, on Wednesday morning, study Monday and Tuesday. You're going to recognize patterns in the market. And the most important thing is you're going to recognize patterns in yourself. Bobby T, you may take 20 trades over the first 3 days, and when you go back and study them, you might recognize that you traded into termination conditions 15 times. And you can say to yourself, all right, this is my problem, termination conditions. This is based on a true story about me. So you start committing to it. You write it down on a piece of paper. Don't trade into termination conditions. They're taking your money. Study termination conditions. Go back. Make sure that you understand what one is. Make sure that you understand, use the language, that it removes your clear path. And you'll continually get better and better and better. And then when you get the best of the best look, put it in your personal trade setup looks. Guys, this right here is 55 high probability trend trades. Rules met 100%. Just entries. That's the only thing I'm worried about. Based off of these pictures, I can create a little more advanced management plan. I'll begin to recognize, watch this, under management things. I'll begin to recognize when I have odds favorable momentum on the 13.2, maybe I don't have to get out at $200. Maybe this much momentum with nothing in the way says let that second contract run to the key Fibonacci area. So I'll develop a management plan based on execution of my entry plan. Does that make sense? Guys, this is your plan in the beginning. And Bobby T, you sent me a message this morning about your plan. Thank you for that. So now just, or not this morning, this weekend. So now you just commit, right? So your job, Bobby T, is to find these pictures, to take these pictures, to post them in class, to put them in your spreadsheet, to fill up your plan and create that trust. And trust takes a while, guys. It really, really does. So I'm going to put this example plan in the room as well. Guys, steal it if you want. That's okay. Nothing in there is trademarked. But write it down, define it, make it yours. All these pictures. Crude oil. Anything can happen triggers. Right? Smalls are working above the large. Losses of momentum. Areas not outside or not inside of favorable large triggers. Nothing rules-based happening in crude. Let's see what's going on with the S&P. Didn't quite make the area. Back to the mid-band. Working its way down. Odds favorable. Guys, there is high impact news in 3 minutes. In 3 minutes, this chart is probably going to go nuts. Let's tighten it up. Let you watch it a little bit. I'm going to take a minute. I'm going to go reload my water. If you guys take a trade, post a picture. If you have a question, post it in the room. When I come back after this first break, we're going to start looking at the charts that you guys posted. And then we're going to get into live market reading. Smalls below the large, larger wide, angled in the direction of the trend. No divergence potential. That negative number isn't flashing. Guys, if there wasn't news in 2 minutes, my window of opportunity is right there. We'll see if it holds true in news. I will be back in just a few minutes. Ed, it must have been news, huh? Did you guys see how that dropped? I walked to the other room, looked at Jen's charts, and it just went boom all the way down. Good stuff. Guys, you want to see something? Why is Fibonacci such a big deal? You just got on and bam. So you made this happen, Ed. That's why we can't have nice things. So guys, check this out. I love this. Remember that your 13.2 is a broad stroke of a brush, right? 13.2 gives you the overall temperature of the market, and this was news. And this thing came screaming down with so much momentum, right into 40.23.94. What did your small chart tell you about 40.23 area? Do you see how even though everything was going down, those triggers are starting to break through? Look at this, small return to the large, 4 divergences, the last one is higher. But more importantly, Fibonacci, these are key areas. Guys, one of the biggest advantages of Nexgen, and this is something that I had to do a lot of study, I think, to believe. If that makes sense. I was like, okay, yeah, Fibonacci, cool. It's fun to say. Italian's a great language. These key areas are areas where institutional traders, where deep pocket traders, where people that move the market. Not me. I have zero control over the market. But what I have is the ability to recognize these areas before the market gets there, to understand that there may be a giant fight happening there, that it takes away my advantage or that it adds to my advantage, depending on which direction and what's going on. So on a larger chart, we reach these key areas. Look at what your 5-1 does. Sellers, buyers, sellers, buyers, sellers, buyers. You can actually see on a smaller, faster chart that fight happening between buyers and sellers at the key area. This is why I put so much weight on termination conditions, because termination conditions can stop the market. It's really pretty cool. They fight it out, and then somebody wins, right? They push all the way back down. Guys, look at your large triggers. Look at your small triggers. They all stayed above 40.28, didn't they? And then they start going up. And then right here where the small are trying to accelerate, you get a no divergence, pull back to an area of support inside of favorable large triggers. Not a high probability trend trade because the momentum isn't there. But guys, when you're coming from an area likely to stop the market and a termination condition, you're going to learn to absolutely love this look. Smalls above the large are wide. The wide are angled in the direction of the trend. We haven't reached a key area. Can we identify after the reversal bar where the market is likely to continue? Area of support inside of favorable large triggers. If you're in this trade now, there's outside of the window of opportunity. That initial, actually there's your 12 ticks. Let's do that. There's your initial 12 ticks. I have the advantage of momentum, the advantage of no termination conditions. I'm coming from a key Fibonacci area. Are you guys with me so far? Initial stops in place. This one may get us. I don't know. It's right after news. I don't care because I have a statistical advantage. Probably out of that one. So guys, I'm going to scroll through. We're going to take a look at your chart, see what you guys were doing. Let's see where we started today. Looks like John Novak got us started off this morning with a picture. Smalls below the large are wide. They're angled in the direction of the trend. The smalls have broken the area, but the large haven't yet. We do have divergence. Pulls right back to the area of resistance inside of favorable large triggers. Medium probability trade. He takes the best of the best entry. He's reducing risk as the market moves in the direction of the trade because it is 50-50. He's got 3 ticks of risk per contract to get down to that next key area. Nice trade. That's that 50-50, that medium probability. Gary, let's see what you did. Termination condition. Multiple divergences from a termination condition. Triggers beginning to flatten. Just recognizing my rules aren't met, not my trade, no matter what happened. He was going to take one shot at it, didn't fill. Trading into termination conditions. And look what happened. If you'd gotten in, you would have had to manage out quick. Only you can decide if that's your trade. Great bottom, creates a full reversal, gives odds favorable momentum, no divergence, perfect entry. Money, money. Michael Bogatin. Absolutely beautiful. I think we even talked about this one, right? Split triggers. Those were those split triggers. So you have an area of support inside of these triggers, an area of support inside of these. It's a big window of opportunity. It went to the lower one, but your stop kept you safe. Beautiful trade, Michael. Did you recognize that at the time? That's a nice one. Split triggers. So remember that window of opportunity is from the highest point of support to the lowest point of support. That's a pretty good window. It's about 9 ticks wide. Keeping your initial stop in the right spot pays huge dividends. When you have the advantage of momentum from a termination condition, you haven't reached that next key area, make them come get you. I love that trade. That's such a good trade. Jose G, what did you do? Odds favorable, 50-50, no divergence, perfect entry, got paid twice. Jose G, nice trade. And we've got another one from you. Jose, this one. Smalls are below the large. Not odds favorable momentum. I'm not sure. Jose, are you with me here? You said that you had odds favorable momentum. Smalls below the large. Am I missing something? You have a red background, meaning a downtrend. You have smalls below the large. And then you have flat triggers with losses of momentum, and you went long because of an HVA line. Broke a few rules on this one, Jose. You took away your advantage of momentum. And you fought the trend. That one just didn't work out for you. I never like it when you guys take a loser, but every time you post a loser, we can identify it, right? We can go through, we can talk about it. And if I just break it down to this picture, is that your best look for longs? Not so much. It's pretty cool though, guys. This is what we do each and every day is we take what you're doing, we talk about it. Hopefully we can create some little realizations, a little more understanding. And then we get to move forward a little bit with it. Joel, nice to see you. Let's see what's going on. We talked about this one earlier, I believe. What do you think? Smalls above the large? Large or wide? They're angled in the direction of the trend? Which one, Andy? The one that Jose or the one that you posted? We'll put rules on it. We're going to do it to Joel here too. Okay, we'll look at it in just 1 second, Andy. I got you. No worries. All right, Joel, are you ready? Is the market coming from a good top or bottom? You had a termination condition that created that reversal, right? Everything says up. So we're good. Did you have odds favorable momentum, Joel? I think yes. Did you have no termination conditions? Without question, right? So the only thing left is, Joel, did you have an area of support inside of favorable large triggers? Oh my gosh, that's picture perfect. So Joel, this is where, okay, so when you lost this trade, I'm just going to ask, did you think you did something wrong? Or were you comfortable losing this trade? Did you feel okay about it? I would have felt great about it. It's okay, right? Because if you give me this exact setup 100 times, 30 of them are going to end up just like this. But what's the better part of that? 70 of them are probably going to pay you. It's just a cost of doing business. Joel, this is a great picture. It's an awesome trade. The key is to trust your rules so much that you take that trade every time. All right, Andy, you said, was this a high probability trade? You're welcome. So Andy, I'm going to give you the exact same litmus test here. I'm going to put the checklist on it for you. Is the market coming from a good top or bottom? Absolutely. So there's one on the checklist. Do you have odds favorable momentum? Absolutely. There's two. No termination conditions. It looks like your large are pulling through that area. Right on it. Odds favorable, no termination. Do you have an area for entry inside of favorable large triggers? It looks like you might be just below the large triggers at that lowest area of resistance. I think that's a great entry. Andy, nice job. You started last Friday? That's the one, my friend. So here we go. Well, welcome to Nexgen. This is picture perfect, isn't it? You have the advantage of momentum. Let's go through it. You have the advantage of a clear path, and you have an entry where the market is likely to continue. Andy, you took everything that I teach in this classroom, and you turned it into what looks to be a winning trade. Nice job. Do you have the checklist, Andy? Cool. The cool thing is if you put this checklist or you write your rules on every chart, you'll get to the point to where you begin to police yourself, and you'll no longer say, hey, Mark, is this a high probability trend trade? You'll say, hey, Mark, check out this high probability trend trade I just took. And I'll be like, heck yeah, that was a high probability trend trade. Great trade, Andy. Picture perfect. Everything that I teach, easily. Guys, this is the S&P. We've gone wonky, haven't we? Flat triggers, couple divergences. Not the best look. Thank you for posting. If more demos, if more new users posted, more demos and more new users would get to where they want to be faster. So check it out. Termination condition creates a full reversal. But guys, notice how my small trigger lines haven't made it through support. Do you see that? What does that make this area? Termination condition, right? See how my large triggers are all the way up at this reversal bar marker? Chances are price is going to come in and close that gap to the triggers. Large are kind of flat. They were a full bar away. Smalls never made it through the area. This is an awesome example of how your rules are designed to keep you safe. In the beginning, if you simply say this is a termination condition, I'm not looking for this short, you get to keep your money, right? It's not as exciting as not trading or as taking a trade, but it keeps you safe. Your rules keep you as safe as you can be. Your rules keep you with the best of the best, the advantage. In true story, the market doesn't care what you want. We have zero control over the market, guys. The one thing that we can do is control whether or not our rules are met. The sharks are the big money investors, those institutional traders, those deep pockets guys. These are the guys that create tops and bottoms. These are the guys that establish the momentum. These are the guys that are looking for fights at key Fibonacci areas. Come into this with the mindset that you're the remora. You're going to let these guys rip each other to shreds, and then we're just going to be on the winning team. We're going to be with the guy that created momentum. We're going to be with the guy that gave us all the advantages. We don't have to be first. We just have to have our rules met. Gary, let's see what you did. Gary says no trade, termination, couple divergences. Great read, Gary. Absolutely no trade. You've given away the advantage, haven't you? And now we're at that little indecision. From a termination condition to a termination condition. Was there a 50-50 in there? Not so much. 3 divergences at key areas. Creates a reversal. Can't break it. Nothing to do on crude oil, guys. We're in a holding pattern. 90% of what we do is going to be reading indicators. Rule number 1 says odds favorable momentum. We never had it. Don't have it. Now I've got smalls below the large, but the large are flat. Smalls haven't broken through those 1-to-1s. I have an absolutely perfect pivot stop out. Price reaches a cyan divergence low, exceeds it by a tick or two, and begins to trade in the other direction. This is a termination condition. This is a termination condition. Guys, this is the famous go make a sandwich pattern. There's nothing for you to do here. No advantages. Jose, let's see what you did. Could crude be entering shop? It certainly could. And what does Jose mean by that? Maybe the market's going to consolidate a little bit, right? Check it out. Resistance holds, support holds. Resistance holds, support holds, resistance holds. You think it's going to come down and retest support, maybe? Maybe go back up to resistance. Let it break out, guys. We don't have to be first. No reason for us to be first. It's not even a weak bottom, Joel. It's just a termination condition, right? Price reaches an area of support. Where are your trigger lines? They're all above. No short trades. Price pulls all the way back up. Don't have odds favorable momentum, so it takes high probability trend trades off. Price pulls all the way back to support. Gives us a pivot stop out at support with all the triggers above. If I were a betting man, I would say that this market is probably going up towards 40, 44. The most likely scenario, finish the move to the fibs. But there's nothing for us to do. There's no advantages for us just yet. And guys, this is patterns. Everything we do is patterns. When I get a pivot, not from a key area, and it pulls back to that mid-band support, very often it finishes the move up. to that next key Fibonacci area. Termination, market pushes up, comes back to support. Termination, market pushes up, comes back to support. Termination, pushes up, comes back to another termination. Guys, this is a fight. The sellers had their way with news, and then the buyers are trying to push it back up, and there's a fight going on. Do you see it? What's our job? Our job is to let those guys fight. I can't go short into a pivot stop out. I can't go long against a trend. If you're a brand new user, you're sitting on your hands. If you're an experienced user, you're thinking of if-then scenarios. If this area breaks, if I get odds favorable momentum and no termination conditions, I'll look for a short trade. If this breaks above my large triggers and things roll, I'll look for continuation to the next key area. Same thing with crude. Smalls are up, large are down, resistance held, support held. In order for me to take a trade, I need one of those sharks to win. I need the advantage of momentum. I need the advantage of no termination conditions. And I need an area of support or resistance inside of favorable large triggers. Watch this. This is how simple it can be. Rule 1 not met. Not trading now. And then you just stop. Stand up. Walk away. Don't stare at it. Don't try to make something happen. You're going to see the market move without you when the rules are met or when they're not met. And you're going to say to yourself, man, I knew it was going to go, and you're going to want to break your rules. Here's our next key area, right? 38.25. Are the sellers going to push back? Or does that divergence and that higher divergence and this divergence and this pivot stop out and everything starting to go up? Is it going to push us to the next key area? Does anyone know for sure? I don't. But 8 minutes ago, I said because of this pattern, this is the most likely outcome, not guaranteed. My chart reading allows me to make an educated choice. My chart reading kept me from taking this short. Did anyone take this short? Because they saw the small below the large and thought, man, we should be going down now. I used to. I've got two key areas, guys. I've got a potential pivot stop out here, and I've already had a pivot stop out here. It either needs to break that way or this way, and until it does, I'm on my hands. You guys with me so far? It's a lot to take in. If you're on a demo, it's a lot to take in. If you're brand new to the software, it's a lot to take in. I get that. It's that slow and steady, guys. It's that slow path to getting to where you want to be. Step-by-step path to becoming a confident trader. Guys, when the market is caught between areas, I start to ramble and I go right back to the manual. Go right back to the tutorial section to look for the things that give you an advantage, give you something to study. Because if you keep looking at the market, trying to make something happen, eventually you will, won't you? My rules weren't met, but I stared at it long enough and talked myself into a trade. That's a tough one. Got to watch that. So how do you become a confident trader ASAP, guys? That's outlined right here for you. Post your trades in class. Track your performance in your spreadsheet. Present your trades for feedback. Everything you do, winner or loser, Present it in class, get feedback. Maybe you did it right and it just didn't work. Maybe you missed a termination condition. Maybe you missed not having the right momentum. Maybe you missed 3 divergences on your smaller chart. My eyes are pretty trained. I can help you with that. Guys, learn the rules for when it's okay to trade. Simulate your trades daily. Don't practice the wrong trades. Simplify your plan. Write a plan. Use Market Replay to go back and fix your mistakes. Take pictures of the correct trades and present those in class. Repeat this process every day until you take the correct trades, until every trade you take is rules-based. One of the things that you'll notice in this classroom is the people that are taking the most successful trades, all of their trades look exactly the same. All of their trades fit a set of rules, a set of criteria that has been established by them to get them in or out of the market. And it looks exactly the same every time they post. That's what you're shooting for. And then once you guarantee yourself you can win, you can trade live money. So guys, if you're always taking the correct trades, if you're always taking a trade that wins more than it loses, that's how you guarantee yourself you can win. Let's see what the live market did. Termination condition. Once again, right? Divergence high reached, no trigger lines go through. Absolutely no reason to take this long. And now we're coming into that key area once again, guys. We can identify through our rules, through termination conditions, through Fibonacci, where the fight is going to happen. Take a picture. When price reached this area, the buyers were ready to fight, and they did. They fought all the way up to that mid band. The large triggers didn't quite follow. The sellers were ready to fight. Pushed it all the way to support. Trigger lines couldn't break it. The buyers fought back. Pushed as hard as they can, and guys, they got us here, didn't they? That was a perfect trade. That was a buyers are in control trade that didn't work. The sellers pushed it down. Notice that the trigger lines don't get below the area. The buyers push it back up. The sellers push it back down. Pivot stop out lets us know to not try the short. Pivot stop out lets us know to not try the long. And now we're back into that key area. We can identify where these two sharks are going to fight. Let somebody win, guys. I can't stress that enough. There you go. Rule number 2 has kept you safe 1, 2, 3 times so far. 4 times. Some days these guys just want to fight. The only thing that we can do is sit on our hands and wait, which isn't a lot of fun. I get that. Crude oil's got that same fight going on, don't they? All the way up to resistance, to support, to resistance, to potential pivot stop out. We're waiting to see. Are they going to break it? Or are the buyers going to push back? Does anybody know? I have no idea. Because I have no idea, I'm sitting on my hands. I'm waiting. My rules aren't met. Did somebody go short because everything was red? Guys, true story, this is the hardest day to teach a class. When the markets are fighting like this, when the buyers and sellers can't seem to figure out who's going to take the advantage, these are the hardest days to teach because our job as day traders is to read our indicators. And when our indicators aren't giving us a clear path to success, look at that, once again. It means that we just have to sit still. Guys, this is a great time to go stretch your legs. This is a great time to think of a question that you have. to post a picture from your market replay, to do something other than pulling the trigger. You sat there and watched you trade 2 contracts from 6 to 7 last night? Oh, really? Did you follow the rules? It's nuts, isn't it? Guys, people think that there was a gentleman, I'm going to say a gentleman, I don't know who he was, but during one of the live broadcasts on YouTube, he was actively calling me a charlatan and a snake oil salesman. And he was telling me that Nexgen was full of crap and all these things. I didn't know. My wife told me that that's what was happening. Guys, Nexgen... Ed. Yeah, I've seen that too. I'm going to give you guys an elliptical, right? Snake oil is your favorite kind of oil. Amen. Nexgen is like selling you gym equipment. Guys, I can give you an elliptical and a weight bench, and it's not going to do anything for you if you don't learn how to use it. That's what these classes are for. These classes are to teach you how to use the tools that Nexgen provides. The software does everything that we say it should do. Your job is to learn how to read it, to learn how to read that software, to be able to recognize the advantages so that you can take trades. $825 in an hour, Ed. That's not so bad, is it? You spent a lot of time working on developing that plan, making sure that you have advantages. That's the part people don't get. I wish I had that picture of the path to learning the software. First couple weeks, you don't know what you don't know. You get a little lucky on simulator not trading rules, and you're like, I'm going live, and you blow out an account. And then you have this little moment where you're like, all right, this is going to take some time. If I'm going to make money with this, I'm going to have to study. I'm going to have to participate. I'm going to have to ask questions. And that's when the magic happens, guys. When you give yourself permission to be a student, they're still trying, aren't they? Blue is mine, huh? Does it work? Of course it works. There's too many people making money with this software that don't. Do you know what they have in common, guys? Is they all have a plan. The people that are truly successful with the software have a written plan and they've committed to it. I'm going to show you guys this one since the market's trying to break out of areas. The other morning I had this little, okay, what have I noticed about trading? What have I noticed about trading with me? This isn't necessarily Nexgen. This is me, guys. This is me as somebody that has gotten the software as a new user, that had to learn the trigger looks, that had to trust the setups. I've been through each and everything that you guys have been through. And the most important thing that I've realized is I can't control the market. The only thing I can control is myself and whether or not I enter when the rules are met. That's the only control that I have in trading. And that I have to develop trust in my rules, believing that they give me a statistical advantage every time I take a trade. The average person will tell you, yes, I know my rules, I believe my rules, I trust my rules, right up until it's time to take a trade, and then they begin to second guess. If I know that my rules win more than they lose, how do I know that? Because I've taken 1,000 trades of my rules. I've taken 1,000 pictures I've posted in class. Then I have an edge. I have an advantage getting in the market. One of the things that I had to come to terms with, guys, and this is really hard for new users especially, is that if something wins 70% of the time, it must lose 30%. And I have to develop such trust in my rules that I'll always take the trade when the rules are met. We've seen a couple examples today, right? Where the rules were met and the result wasn't what you wanted. But it didn't change the fact that your rules give you a statistical advantage. And then here's the magical part that happens right around, I think, the 3 or 4 month range. Is my rules removed emotion, anxiety, nervousness, and fear. And if they didn't, then I didn't trust them. Who scales their chart endlessly when they're in a trade? Who leans forward? Whose palms get sweaty when they enter a trade? Who watches every tick when they're in a trade? I did. Oh my gosh. My charts, when I was in a trade, I would literally do this, just back and forth over and over. Oh my gosh, if I move it around, maybe if I give it more space, it'll go up. Maybe if I give it less space, it'll go down. Over and over, guys. Completely anxious. But the more that you trust your rules, and Shane, you'll get this the more you study them. I literally put a trade on, and I lean back, and I relax, and my palms don't sweat, and I don't get nervous, and my heartbeat doesn't go up, and I don't scale my charts. The only thing I do is I watch it to move my stops, and that's it. And as long as the advantages are there, I take the trade. And my job is to follow my rules every trade, to take pictures, to present them in class, to put them in a spreadsheet, to study daily so I can achieve my goals. And this is the one that got me. And this is the one that gets, I think, everybody. Can't practice the wrong trades because you're on simulator, guys. You can't say, well, it's not real money. I'm going to jump in here. It's not real money. I'm going to fight that. Because what happens is you get lucky on simulator, and then you get slaughtered in real life. And you start from point zero, you know? You did live a couple, didn't do bad, little shaken, margins confused you a little. There's definitely more pressure, isn't it? You guys know how gymnasts have that foam pit, right? And they jump into that foam pit 1,000 times. They jump into that foam pit so many times and develop that rotation, that landing, everything with zero fear because there's no risk of broken arms or snapped necks. That's your simulator. The simulator is your foam pit. So you need to be on simulator until everything becomes second nature. So here we go. Couldn't make it, couldn't break it, couldn't make it, couldn't break it, couldn't make it, couldn't break it. Does it look like somebody took an advantage here? Yeah, Michael, you'll know exactly how much you trust your rules the first time you go live. And I think 9 out of 10 people realize that they don't trust them as much as they thought they did. But that's okay because you do it and then you start to settle down. You're like, well, it's okay though. I got my rules. I've got my trades. I feel good about it. We said back here that it looked like the buyers had an advantage, right? That's when that box came up at 10:20. It's 10:42. Haven't had rules met yet. And there it goes to the key area. I knew that because we exceeded an area and didn't make it, and then we couldn't get back below that area because of patterns, the odds were favorable, that's where we were going. Pretty cool, right? It's just chart reading. Used to blow me away when John Novak would do that. Couldn't figure out how he could know something like that. And it's just chart reading every time. Had your winner here too, didn't you? Resistance to support, back to resistance, none of the trigger lines go. Everything agrees, down the market goes. Anything can happen, triggers. Loss of momentum, and it pushes a little bit beyond that area. Price reaches resistance. Where are my triggers? My triggers are all below it. Resistance is likely to stop the market, and so far it has. Does anyone talk to themselves when they trade? I do all the time. What do I see? What do I see right now, guys, on my 13-2? I see odds favorable momentum. I see a 50-50 on that key area. You're usually cussing, right? That same area that stopped the market, created bounces 3 times. I see a 50-50 on it. I do see strong triggers. I see a tiny little window of opportunity on my 5-1 in the event of a pullback. Do you have a rule about a 50-50 at a divergence high? What do you need to see on your 5-1 if you want to take a shot at it? Guys, a very common phenomenon is when you have a consolidated area, the buyers will give it a great push or the sellers will give it a great push. And sometimes there's somebody waiting there. So I like it to be perfect. I would apologize for there not being a ton of setups today, but I don't control the market, guys. All I can do is read indicators and wait for advantages. Today is one of those days that teaches us to be patient, to wait for a statistical advantage, to give yourself the opportunity to be successful because the advantages are there. So there's a 50-50 on that key divergence high that had been holding. And then there's a divergence, which means a loss of momentum on my 5-1. Let's see what happens. Some people will take this trade. Some people choose not to. That has to be your plan. Whether or not you take this trade is entirely up to you. Have you written it down, what you'll do with 50-50 trades? If you took it at 38.50, have you identified your first trouble spot? You have a couple ticks risk on it now because of the reversal bar. Where's your first profit target? Where's your second profit target? If all I'm starting with is the advantage on the 13-2, what do those triggers say? Just the triggers alone say giddy up. But that's not all of the rules, is it? It's just a matter of advantages. John used to call it the bar fight. How many advantages do you have versus how many disadvantages do you have? I have the advantage of momentum. I have the advantage of not reaching a key area yet. I have the advantage of strong triggers. I have the advantage of a small window of opportunity. I have the advantage of large and synthetic trending one on top of the other. I have the disadvantage of this area that's held a couple times. Some people will say that this divergence keeps them out. Some people will say, you know what, my window of opportunity is so small, I'll jump in, I'll take some quick profits, I'll get to break even as soon as possible. Some people love the action, some people just want a clear path. Neither is wrong. And I think that's what everybody has to remember is neither is wrong. There is no right or wrong plan if your rules provide an advantage. Dun, dun, dun. You should give this one a read. Psychology of Trading. That's a good read, guys. Only a deep understanding of your technical analysis advantages and executing the correct trades over and over will be a key factor that positively influence your trading psychology. If you find yourself trading scared, mad, frustrated, or flat out vengeful, stop trading and refocus on the highest probability trades and your management rules. There is no shame in returning to the simulator to rebuild confidence in your trading plan. Still fighting, aren't they? Nothing to do. Guys, I'm going to go ahead and take a break. I'll be back at the 11 o'clock hour. When I get back, we will focus on all of your questions. Whatever you guys want to talk about for the last hour. If you're brand new, man, flood this room with questions. If you're experienced, flood this room with questions, observations, pictures. I'll be back in a few, guys. All right, guys, here we go. Last hour. Ed, how do you feel on not taking that trade? You comfortable with having not taken it? Do you wish you would have taken it and managed it? Was there information there that you felt like you could develop a plan with? Guys, this is the hardest day in the world to trade when your rules aren't met. Not because the market's difficult, only because it means that you have to be patient. You have to let one side win. Alex, let's see what you got. Strong triggers, love it. Weakening, absolutely. So, great question. Is this considered a strong trigger? Yes and no. Let me find it in the manual. So in a strong trending market, sour candy apple, yes. That is the technical term. This is just one of those days. And there's two ways to look at it. You can look at this day as saying, man, there's not anything to do. This sucks. And that's what a lot of people say. Or you can say, I am so thankful for my rules because when the market was consolidating, I didn't get chewed up. When areas had the potential of holding, I didn't trade directly into them. And you can look at it two different ways. This can be a big negative, oh my gosh, this is the worst day ever. Or you can say, this is the best day ever because I have such a great set of rules that I'm not losing money. I'm not taking trades, but I'm not getting caught up in this. So Alex, when a market is trending strong, and this is a strong trend. It'll be defined when the large and the small are crossed up, but trending inside of each other, and that's when you see that dash. The small triggers are up, but inside of the large. This is what it looks like on a strong trending market, Alex. It's typically after 30 bars in the same direction. Areas break. Very much like what you see here. This strong triggers, weak triggers turn into this strong trending triggers. Does that make sense? So when you have that strong trending trigger, until an up bar is made or until an area is reached, you can look for an opportunity. So this was crude oil, right? If you took the first shot, the only shot, you'll have to define. For me, that's not odds favorable. I stick to my guns. This is odds favorable. This is, if I get the perfect setup, I'll take a medium probability short. For me, the perfect setup means that my small are well outside of my large. Because doesn't this mean that I'm losing momentum as well? Doesn't this divergence mean that I'm losing momentum as well? And it may push up, back up to this area. So Alex, anything other than this look, I'm going to force my smaller chart to be perfect. Does that make sense? Okay, cool. And now we have the tail end of momentum, right? Smalls have returned, but they're not completely inside. One divergence, if you got in right at resistance, a second higher divergence with the small triggers coming inside with a loss of momentum says that this market may push higher. It's just all that chart reading. There we go. They made the key area, guys. Let's see if the buyers give up and the sellers just drop it like a rock. That was 40 minutes ago. We put this box up there. 40 minutes ago, our chart reading told us that the buyers were holding an advantage, but the sellers weren't willing to give it up. Well, the buyers made it. Look at that. One tick past that key area, guys. Let's see what happens. Is anyone else amazed at Fibonacci? Were there ways to get in? Maybe not high probability trend trade ways to get in. But what do you think, guys? If you spent 30, 60 days studying this, taking pictures, looking at these patterns, you think you might have found a way in? They did it. That's what this fight was for. That's the finish line. For now, right? Let's see what happens. I always think it's amazing. You see this huge fight by buyers all the way up till they get to a key area. And we'll see what happens. We'll see if they stop fighting. Sometimes what they'll do is they'll let the sellers go short right here with this much momentum, and they'll come right back up and stop them out, and then the buyers will go get lunch. Gary, today would have been fine. 11 o'clock question. You watched the management video and trading, the edges video quite a bit. Over Thanksgiving, you caught that using a 14-2 chart. This weekend, I got to know. I think it was made in 2020. No, so Michael, we used to use a 14-2. And it's just, one of the things that happened is John Novak developed the software is he was looking for the best time frames to pair up. Maybe a year and a half ago, 2 years ago, he said, you know what, it's silly. Let's do this in Fibonacci increments. So there's a 13-2, there's an 8-2, there's a 5-1, there's a 21-3, there's a 34-5, all Fibonacci number. So he kept not only Fibonacci for the key highs and lows, and then he just incorporated it into the chart numbers, the size. There's not much difference at all between a 13-2 and a 14-2, and there's still quite a few people, older clients, that use that 14-2. But what we do, Michael, any time frame, NG time, yeah, I rebuilt everything this weekend. Every weekend, part of my Sunday morning, I grab a cup of coffee, and I do this. I do this every Sunday. So every Monday morning when I come in, if we don't match up, rebuild, start fresh, repair your data, make sure it says don't merge, stuff like that. I love to start fresh every week because if you've been alive at all, things corrupt. Digital data corrupts. A tick or two here makes a huge difference. It can create challenges with divergences, with fibs, all that sort of stuff. So yeah. And if you need help with that, guys, go through the user guide, run through it. I think you should practice it anyway. I'm a big fan. If I'm watching the market and I accidentally do this, I just want to practice. Oh my gosh, everything just squished. How do I fix it? Well, if I'm squished, F, whoops, sorry, I'm doing it on my on the wrong monitor. Capital F gets me back to stretched. This white arrow gets me back to the most current bar. Practice that. If you go that way and you're like, oh my gosh, that arrow brings me back just like a typewriter. If you see a pattern, take a picture of it. Guys, this is a clear termination condition. Absolutely no triggers even came close, right? So there's no long trades. Smalls are above the large. There's no short trades. It's frustrating when the market doesn't do what we want it to do. Tail into momentum, 2 losses of momentum, and it pushes up beyond. Chart reading, even if you took the first entry, those smalls returning to the large, that second higher pivot, hopefully you got out break even, and now you're just waiting. Let's see what happens. Everything is below, but it may push up to that mid band, waiting for an indication of which direction the market's going to go. Even my wife was like, yeah, this has been a rough morning. She's like, I thought I was being too conservative. She's like, I just haven't taken any trades this morning. And I high-fived her. I was like, good job. There haven't been any to take. Michael, did that answer your question on the 13.2, 14.2? It's really just, they're so close. It was just a matter of changing direction a little bit. Okay, cool. I've got a buddy in town, and he was looking at the charts last night with me, and he's like, I don't understand it. Like, how did this come to be? And I told him, I said, I have absolutely no idea. I'm not the tech guy. John Novak is the smart one. He's the one that builds this stuff, that creates the software. I'm the one that gets to teach you how to read it. It's like Mario Andretti probably can't overhaul an engine, but he can drive the heck out of that car, right? And that's probably outdated saying Mario Andretti, but you know what I'm saying. This much momentum, let's talk about patterns. This much momentum into a key area, a lot of times it'll come up and retest it before deciding whether or not that area is going to hold. Edge video is tough. Can't make the 12-tick entries. Edge trades are a different breed. Michael, full disclosure, if I had to pick one of the trades that I lose more than any other trade, it's an edge trade. Because an edge trade relies on this look. So guys, this is a 21-3 chart. Take care, Bobby T. Termination condition creates a full reversal, odds favorable momentum. What if we took the 21.3 and put it where the 13.2 goes, and put the 13.2 where the 21.3 goes? Or where the 5.1 goes? Termination condition. Strong triggers, there's a pullback. Strong triggers, there's a pullback right to support areas. Goes into a mid-band, pulls all the way back to the large triggers, gives us a pivot stop out with odds favorable momentum. This says that off of these triggers, it's probably going to keep up. This pivot stop out kind of confirms it. This pivot stop out gets you up to the next area. Your larger chart tells you that the market may continue up. Your 13.2 says, let it break before you try it. Any time frame, guys. Any time frame works. And now we're at that key area. We still have odds favorable momentum. The small are trying to break through, but they haven't yet. There we go. Small have broken through. Large have not. What do your rules say about a 50-50 trade? My rules say that if there's no divergence, there's my area of support inside of favorable large triggers. If I get a pullback and no divergence prints on the 5.1, that's my key area. Give me a Y in the room if you're with me on that. I didn't get a reversal bar yet, but I can already start figuring this thing out, right? So let's see what happens. Let's watch it, guys. We'll do it like that. There's my horizontal, there's my entry line. If the market pulls back without divergence, that's my window of opportunity. It is one line wide. So what can I do now? Is there anything I can do to make this trade happen faster? Is there anything I can do to create more of an advantage? There's not. I've already done it. I've identified odds favorable momentum and make a sandwich. I've already identified that I'm 50-50. Not my chance of winning. It means that my small triggers have cleared a key area, my large triggers have not. Therefore, the area is not broken but has the potential with odds favorable momentum. I would have my finger on the red X on my order as this market tries to push back down. If divergence prints, it's not my trade. And if it's not my trade, I have to be quick enough to cancel my order. Divergence printed, not my trade. Remember when we said when we reach an area with that much momentum, it'll often come and retest? It did. But the area still hasn't broken. Divergence printed. And once again, my rules keep me safe. And if this market breaks below that 40-50, 40-40 area, it's probably off to the races. Because the buyers got what they wanted, didn't they? They made it to that key Fibonacci area. And all the sellers said, hey, they got there, let's get in. And they started pushing down. And the buyers said, nope, we're going to clear you out real quick. Pivot, stop out. And then once they clear them out, they're like, all right, you can go down now. Pretty cool, right? Guys, this is what we do each and every day. When you see this happen enough, hey, benefits. When you see this happen enough, when you get enough seat time in front of the market, your ability to read indicators, like this is what plays through my head when I watch this. Giant fight to get to the key area. The key area finally gets reached with a ton of momentum. But the buyers let up just enough to give the sellers a false sense of security, at which time they push back, do a stop run, pivot stop out at a key area that hasn't broken yet. And after they clear those stops, they don't care what happens. That's where the shark swims off. Does that make sense? Sometimes when I talk like this, it makes sense to me. I want to make sure it makes sense to you guys. The market is a battle between buyers and sellers. And if you watch it long enough, Nexgen gives you the advantage of recognizing where that battle is going to happen. And then the patterns that are created are used to provide an advantage. Guys, I've seen this enough, 50-50 with divergence. That's not my trade. What does that mean? That means that if this happens 10 times a day and I don't take it, that's 10 times I've avoided a loser. Now I have that termination condition. Look at my large trigger starting to roll. Large trigger starting to roll on this chart. Termination condition is going to create a full reversal. If a full reversal is going to give me odds favorable momentum and a potential pullback, don't I have a high probability trend trade? Benefits. Absolutely perfect. Nice job. So, Mr. or Mrs. Benefits, I don't know which it is. Your job now is to take pictures of everything that you see. Share them with me in class. Ask your questions. Look at that, guys. Patterns for the win. Odds favorable momentum. Haven't reached the key area. If this market pulls back, these large triggers are going to end up right here at the 1-to-1s, right at the mid-band. Probably going to coincide with the collision course for these large triggers. Is anybody with me on this one? Do you see it? Termination condition creates a full reversal, provides me odds favorable momentum. In the event that I get a reversal bar, I can create a window of opportunity. And this window of opportunity becomes the area where the market is likely to continue. John C., if it pulls back and you go short for some reason, where's your target area? Where's your first target area? 32.75, right? There's that key area. Haven't gotten there yet. We're close. Nothing's changed. I know where the market is likely to stop. I know where the market is likely to continue, and I know where that market is likely to go. Now I just have to practice over and over. Guys, I don't tell you to take trades. I just talk about if rules are met. Pivot from beyond an area comes back to the midband. The midband is a full bar away. Price gets a full bar away from large triggers. It closes the gap, continues to the next key area. See that an awful lot. So John C., David B., what happens if price reaches 32.75 and none of my trigger lines break through? What do we call that? If price reaches that area and no trigger lines break through, is there a rules-based opportunity for a short trade? Who asked the question earlier about gauging distance to termination conditions? From the bottom of this bar, I have no room. From a potential entry, I've got plenty of room. Does anybody know what's going to happen without question? 32.75. That's that 1-to-1, John C. Do you see it? Those yellow dots? Bonk. There it is. So now the process starts over. Now I wait for smalls to break through, for large to follow. If the smalls break through, like they have, and I get a pullback with no divergence, there's my window of opportunity. But look at this, guys. There's that key low, that divergence low. One tick. No triggers through, right? Let's see what happens. If I go to the rules and I go to termination conditions, a cyan divergence low line, I start that process. Where are my triggers? When the area is reached, all of my trigger lines remain above, right? I also have a 50-50. My large haven't broke 1-to-1s, my smalls have. Divergence prints. One, two, three, four. Guys, do you think 29.50 has any significance to the sharks? Do you think the sellers know about it? Do you think the buyers know about it? The buyers stopped sellers 3 times at that exact same price, didn't they? Who wants to be the guy that hopes it breaks? It might break because the buyers got what they wanted. It might break, or it might not. I don't control it. All I know is that I've given away my advantage of a clear path. Give me a Y in the room if that makes sense, guys. Closed order, David. Why hope? It's fun. Today's a slow day, guys. Today's a day that tests your patience. So here's a medium probability trade. If I look at trigger lines inside of the large, right? Anything can happen. If I have anything can happen, but no termination conditions, Alex, I don't think so. Honestly, crude oil moves more during the morning pre-market than the ES typically does. The patterns are the patterns. And I think that you can train yourself to focus on patterns on either market. And that's really the key, is just putting yourself in a position to recognize the patterns and the advantages. So I want you guys to see this. Anything can happen triggers, right? But let's talk about that. That's my disadvantage. I'm in a downtrend. My large triggers are down. My small triggers are down. I have no termination conditions. It's 4-to-1. 4 reasons this market should continue down. 1 reason it may bounce up a little bit. So I go to my small chart. Smalls are outside of the large with odds favorable momentum. Everything says down. I have a window of opportunity 1 line wide at the top of my trigger lines, but I do have 1 divergence. This is a medium probability trade. I have some issues, but I'm coming straight off of that resistance as well. If you enter the market right here, if you say, you know what, I'm willing to take this fight, and you get in at 79.25, by the time you get down here to 79.10, you're $150 profit. If you're doing that mechanical approach, you already have money in the bank and you've gone break even. A second higher divergence with small triggers inside says this thing may push up higher. This is that medium probability trade. This is that weighing the advantages and managing assertively. Guys, give me a Y in the room if that makes sense, because I don't want you guys thinking that your life is only going to revolve around high probability trend trades for the rest of your life. You're going to begin to read your indicators in the moment. What are they telling you? Let's see. What are they telling me? They're telling me divergence from a low, getting a reversal, small's going above the large. I'm starting to reverse here. Because of pattern recognition, that's a very likely spot for that market to go. We'll see if it gives me odds favorable momentum to get there. It may. It may not. That's how long it took me to read it. Odds favorable, 50-50, 2 divergences. There's a window of opportunity, but I'm 1 tick above support on a 50-50 with 2 losses of momentum. Maybe not my trade. That's how long it took me to determine whether or not my rules were met. My personal rules are not met here. Your rules may say that from a good top, didn't quite make the bottom, 2 divergences. I know that one of the common patterns is that this push will probably take out this pivot, which puts me at a window of opportunity right here. I'm willing to risk 7 or 8 ticks to finish the move down. That's not in my plan, but I can read the indicators. I can make that decision based on patterns. And I don't know what's going to happen, but I can make a pragmatic decision on whether or not I'm willing to enter a trade based on what the indicators tell me and if I have enough advantages to feel secure going into the trade. That's all we do. Everybody wants to be a day trader. Be a chart reader. Larger still flat. We're directly into one-to-ones. None of my trigger lines have broken through, right? That's a tough look. Nothing to do there. No rules met for a trade, not yet. I want to thank you guys that are on demo for sticking around right now, because I know that this market isn't producing an awful lot of those high probability trend trades that we look like. It's not giving us a statistical advantage like we wish that it would. And it can become difficult. It can become frustrating sometimes because you're like, oh, I just want to take trades. How can I do that? You want to be a moneymaker? Me too. Me too. Nobody'd ever jump out of a plane if they said, well, your parachute might open. There's like a 50-50 chance. You'd be like, holy crap. But if they tell you, you know what? We've packed 1,000 chutes and 999 of them have opened. You've got a 1 in 1,000 chance of just bouncing off the ground. Most people are like, okay, I have a statistical advantage to survive this jump out of a perfectly good airplane. I hope it's better than 1 in 1,000, but you know what I'm saying. What's cool though is we can sit here and we can watch the market, not jumping out of a plane. Come on, Ron. That's on my list to do. My spine surgeon said no, but I may do it anyway when I get old. You know what? I just heard my wife from 2 rooms over yell, get. You don't like my list? I've done a lot of fun things in my life. That's one of the fun things that I haven't done yet. Guys, look at how the market at this key area is going up, it's going down, it's going up, it's going down. There's a fight. And it made it to the key area, didn't it? Made it to that Fibonacci area of support. Just never gave us an opportunity. Not my money. And then the process starts over. We're in an area of support. Where are my triggers? What do I need to see? In order to take a trade, what do I need to see? If then, right? That divergence. Now the large are starting to turn a little bit. Smalls are trying to break through those one-to-ones. Smalls are above the large. One area of support inside of the large. If we don't reach this key area and this area breaks, maybe we look for an opportunity. Don't really have rules met just yet though, do I? Is that divergence going to push us to the key area? I don't know. It's likely to. I draw a lot of boxes. Good termination condition. Creates a full reversal. Strong top. Doing its job so far, right? Remember when we said that the buyers probably want that key area? And with that much momentum, they're probably going to retest it and then just say, okay, sellers, have your way. Isn't that exactly what happened? You guys want to know a true story? You're going to get so good at reading your indicators that you're going to say the same thing. And you're going to have this moment, just like I did, where you're going to be like, holy crap. It used to amaze me when Mark would talk about that. Well, this is where it's likely to go, and this is what's likely to happen. Likely, not guaranteed, because I used to do it with John Novak. How the heck does John Novak know? Well, John Novak has 30,000 pictures. Oh, look, guys, it made it. John Novak has 30,000 pictures. So here's the second half. Divergence prints. I know that my likely spot is this area of resistance. Can I start looking for opportunities when these triggers roll to get to that target? Not yet. Not if you're a high probability trend trader. But man, if you are a little more advanced and you learn how to read your charts, guys, there was an opportunity to get up to this resistance, to get up to this midband based on expectations created through patterns. So the sellers were pushing and the buyer's foot pushed back. Here's your line in the sand with a lot of momentum. If it pushes against, this much momentum may create a retest of the area. There's no short trades to be had, but any long is directly into a termination condition. Give me a Y in the room if you're with me on that one. We're just reading indicators. All that momentum pushes off of the resistance. The sellers push it right down to those large triggers. Let's see if the buyers give it one more push, maybe create a pivot stop out, because that's where they wanted to be. And then let's see if they let the sellers continue the move down to 78.97. We'll know in just a second. We'll know when either the market pushes through there and the area breaks, or we'll know when maybe I get a lower divergence, my triggers roll, and we get to the other side of everything. Right now I can't go long into a termination condition. I can't go short because everything says up. Now it's a 50-50 to the upside, isn't it? Does anyone else have a lot of fun reading indicators the way I do? This is a good time for me. What's our really large chart say? Directly into resistance. Everything didn't make that key area yet. Here's that 50-50, right? Smalls are through, large are not. Just reading indicators. That's all I'm doing. I'm waiting for an advantage. All I want is an advantage. Nothing to do here. There's a divergence on a 50-50. Everybody has a different set of rules for that, don't they? Have you taken enough pictures of 50-50s with divergence to know exactly what you're going to do? To know exactly how you're going to manage it? What if it comes from a good bottom? What if every chart is strong? What if there's a tiny window of opportunity? Maybe you'll take it. Maybe you'll say that on a 50-50 with divergence, maybe I want a market flow signal. Maybe I want a larger chart to support it with odds favorable momentum. It's an awful lot of if-thens. 50-50. We've had one divergence. There was no divergence on that second push down, and it snapped right back up off support. Right to that first trouble spot. Did you see that? Divergence prints. Doesn't push very far. Get a second pivot without divergence. Comes right back to that window of opportunity. And here's your first trouble spot. 50-50 trade divergence outside of my rules. No divergence prints on the pivot. That's your entry. Tiny little window of opportunity. If you're in at 47, you made your $100 and now you're at a pivot stop out, probably break even. The market either gets you or it doesn't. You guys see the difference on the two? Medium probability trade allows you to identify your first trouble spot. Gives you the opportunity to take a portion of your profits off and get to a zero loss level. If you're at zero loss level, you're at 79.47. That's your break even. If this market continues up to 79.88, no worries, break even never gets hit. Or that second target gets hit at where? 67? So you have 100 in the bank, and you're either going to get stopped out or you're going to make it to 67. Still a 50-50. What if this divergence prints, pivot stop out? Is it still your trade? Still a 50-50. There's a second divergence on a 50-50. You're witnessing the fight. Here's your line in the sand, isn't it? Is support going to hold or is support going to break? Do you guys remember over here when we said when the key area is reached with odds favorable momentum, there's typically a retest? And maybe they'll create a pivot stop out and determine whether or not they want to finish the move down. Because this pivot didn't happen at an area. We'll see what happens right here, right? Pretty cool, isn't it? Expectations filled once again. Guys, I'm doing a lot of talking today. I know. There's not as much trading going on. Everybody have a good weekend. Demos. Did you get to play with Market Replay this weekend? Buyers made it to the area, cleared out the stops. What do you think, guys? 78.97 feel reasonable? If you went long, that pivot stop out was your key. Probably over. Now we're 50-50 to the downside, right? Small's below the larger wide. They're angled in the direction of the trend. No divergence. Big split triggers though. That's a pretty big window of opportunity. You have to determine. $79.16. No areas at $79.16, but you did have one at $79.30, right? 50-50 trade. Split triggers though. That's the top of the window. Inside a favorable large, that's the bottom of your window. 17 ticks on a 50-50. What do you guys think? Ron C, boom, right there. I knew it. Good job. And guys, once again, Ron's picture today looks exactly like every picture Ron has shown me for the last month. Termination conditions, areas likely to hold, get to the right side of everything. He looks for an entry and he gets paid. There you go. You know what's good, Ron? Put a little mayonnaise and sweet relish on it. I had a friend that was a chef. He used to cook an over medium fried egg. It sounded horrible. It's one of the best egg sandwiches I've ever had in my life. Cheese and mustard. All right, that's weird, but I'm going to try that. So we're at that bottom of the window. Thank goodness, man. Don't ever lose that. That's a big window of opportunity, guys. Only you can decide if that's something that you're willing to risk. Large triggers keep coming down. We'll see. Is price going to close the gap to the triggers? Anything can happen, triggers, divergence, losing momentum. Guys, what's it mean when the market stalls out like this? It means somebody's making a decision, right? Somebody bigger and stronger than me is trying to decide. Somewhere there's buyers going, well, do I want to push back up and retest that resistance? And somewhere there's sellers saying, do we want to let them push up and retest that resistance? I can identify where the market's likely to continue, but it's a pretty big range. It's 14 ticks wide right now. And I know that price likes to close the gap to large triggers. Just talking through it. That's all I can do. If this happens, then I'll do that. If this happens, then I'll do that. Some people say, well, you know what? I'm willing to take this shot. I'll put 12 ticks on it. It'll either win or it won't. Cam, what'd you post in my room? Ninja Trader. Cool, guys. Little Christmas sale from Ninja Trader. Thanks for that, Cam. Good looking out. Send that to the snake oil guy. That's me, Ron. That's horrible. There's a reason that I'm in education and not sales, guys, because I'll teach it. I could sell this stuff all day long, though, because I believe in it. There's your 50-50. No divergence. Does the mid-band cross over the small triggers on the 5-1 present a trade signal opportunity with no pullback? John, Mid-band cross over the small triggers. Can you show me a picture of what you're talking about? That'd be great. Show me the picture. So one of the things for me is I like a pullback. I know from study that when price pulls away from the large triggers, it tends to pull back. That's what gets me this entry. Do you see how that worked out, guys? 50-50, no divergence, odds favorable momentum. Which chart, AK? 13-2 or 5-1? Or both? So let's do this. I'm going to go back to the instructions real quick. No worries. So guys, one thing I did this weekend is I started fresh. This morning when you woke up, Nexgen, Jen, and AK said, did you delete the cash and tick folder before you opened NinjaTrader 7? No? So what this does for you is this helps you with fresh data. Nexgen, Jen, did you do this morning? Oops. So that may be a part of the problem, guys, is that you didn't give your computer the daily preparation for high performance. So when you close down tonight, give it a try. See if it works. If you want to, do this real quick. Repair and reset your data. Reboot Ninja. See if that gets you lined up with me. And then if it doesn't, both of your homework tonight is to go through and delete the old charts templates. Takes about 10 minutes. After you delete all of this stuff, and it walks you right through it, you're going to go to the resource page and you're going to download the NinjaTrader 7 and you're going to run it, and it's going to give you all new workspaces. So sometimes if we don't line up, that's why. Sure do like this trade. We talked about it, right? 50-50, no divergence, pull back to the area of resistance inside of favorable large triggers. Turns out there was a high volume area line there too. That works. Getting in around 27, getting in around 12, out. Beautiful trade. Niche trader? That's crude oil, right? Oh, Yuri, gosh. I knew that too. You haven't posted in a few days. So guys, there's your 50-50. Goes right to the key areas. Then there's another 50-50 with divergence. And it doesn't work. Yuri, great trade. I should have known because that chart was slid over. You are the king of the gray space. Nice trade though. Michael, same one, 50-50. No divergence. Perfect entry. Quick target. And you were live. Congratulations. Congratulations, Michael. You waited for the advantages, and you took them. And you didn't hope. That's what I like. You're out at 99, right? Psh, look at that. There's Fibonacci support. Take the money. Beautiful trade. Alex, 50-50. No divergence. Perfect entry. Straight down. So here's your management. Oh, no, you're taking 10 and 20. Perfect. So this is that picture. If you take it, remember we talked about the first goal is perfect entries. You nailed it. The second goal is to come back to that same picture and say with Odds favorable momentum on the 13. I can hold my second contract to fib support. Because with this much momentum, the market is likely to go to fib support. So this becomes your management opportunity, right? And what's the difference between 97 and 09? 12 ticks, right? What if you get an extra 12 ticks on crude oil 10 times a month? It's an extra 1,200 in the trading account. So I would take this one, and that's exactly it. And Alex, you're doing it perfect. So I would take this one, I would come to my spreadsheet, and I just put that picture in there just to reinforce that when I have the perfect entry and all that momentum, when to hold my second contract. And then I can come in and I can study that a couple times and go through and put myself in the best position. And Alex, that was a beautiful trade. Everything about it. And then we get that 50-50 with divergence, right? Price pushes all the way back up to mid-band and 1-to-1s. Uh-oh, what'd I do? Guys, I think I just closed out my NinjaTrader. Holy crap. Are you with me here, guys? I just completely, there it go. Man, everything came back. That was weird. Price reaches 1-to-1s. Price reaches a mid-band. Guys, do you see how far the large triggers were? Room for a full bar. What does that tell you about this area? Yeah, there was a glitch in the matrix for sure. Large triggers are a full bar away, meaning that price is likely to close that gap. Yep, rule number 3 is not met, but not even looking for a 50-50 here because the large triggers are so far away. One of those patterns that'll keep you from arbitrarily jumping in at a mid-band and getting run over. Vacuum, perfect, Alex. So why don't we take a picture? And it looks like we're at the end of class. I didn't realize that we were. And I'm going to use this. And I'm going to put areas reached, large triggers, a full bar away, no longs. It's a vacuum. So I'll take that, make it so that my old eyes can read it. I'm going to share it to screencast, and guys, I'm going to come termination conditions. And I'm going to put this link in there. Thanks, Ron. I hope to. We got a 1 o'clock tea time today. I'm just going to call that one vacuum so I can come back and take a look at it. Sometimes it's about recognizing the advantages, and sometimes it's about recognizing when those advantages have been given away. Guys, great class today, great questions, great participation on a market that was not giving it away today. One of the great things is that when the market moves like this, one day it typically moves better the other day. Leave the bag home, take a slingshot and a pool stick. Yeah, I'd probably do better. Have a great afternoon, Ron. Guys, thank you for being here. Thanks for taking the time to learn the software. Those of you that are new, those of you that are on demo, Do not be shy if you have questions or needs or concerns. Reach out to me, talk to your salespeople, reach out to John Novak if you need to. Our goal is for you to be comfortable, for you to get to a point to where you can be consistent, that you have a solid plan that gives you advantages. And I'm in it for the long haul. I'm with you every day until you get there. All I need is for you to participate a little bit. Take care, everybody.